Good morning, team. I hope you're all well. As promised, I just want to do a breakdown on these CAD yen trades we took last week that ran us really well at the start of this week. They were, in hindsight, really quite simple trades, really clear. CAD yen is one of my kind of pairs. When I've been deciding which pairs to keep and which pairs to get rid of, in the past, CAD yen is one I've always come back to because it just moves so nicely. So I'll take you back to kind of where I was. I'll leave all my markings on just so I can make sure, it's kind of accurate as to how I actually traded it. But we'll kind of talk you through. So we obviously had this really lovely zone here. Clear move up before push down, taking out multiple structures, downtrend, downtrend, downtrend. And then we had these three tags here of this equal high area. Now, whenever you've got two tags of an equal high, you want to be paying attention. But when you've got three, that's something that, really, especially when it's sat so nicely below a zone like this, that's something that you want to pay close attention to. So it was just really a case of watching and waiting. Then really, once we'd seen we had a third touch, this price action here is very choppy, very up and down. I wasn't really expecting this to not provide us with a reversal. So we had one tag into the zone, second tag into the zone, and then a third tag into the zone. So that for me is my go-to criteria. Not only have we had three tags into this higher time frame zone, but also you can see we've now taken out 50% of it. Okay, you see the 50% there. Once that's done, that for me is now, right, this is prime. All I'm looking for now is breaks of structure, and that will then signal me into a trade. So we waited for one break of structure. Could have traded that, to be fair. There's nothing wrong with it at all. That high may have held. Yeah, probably would have held. But I'm not sure of timing. Oh, yeah, that was overnight. So that's Asian range. So I was asleep during this time. So when I got it the next day, it was just a case of waiting for another break of structure, which you had here, and then an entry there. So really simple entry here. We had some impulsive moves down. This was a little bit choppy, to be fair, a little bit choppier, but there's so many reasons to enter a trade, and what we've got to do is we've got to stack the confluences in our favor. That's ultimately what we're doing here. Now, ideally, we would have really liked to see, a really clear impulsive move down and then some choppy price action on the way back up to our order or origin, so our RTO, as we call it. That would have been perfect. However, we didn't get that, but there were so many other things going on. We had now two breaks of structure. We'd had three tags into the zone. We'd had 50% of the zone taken. We were at a really good area as well with these three equal highs, and it was in line with, an impulsive move. So for me, that was enough for me to enter the trade. And CPI caught it really nicely. So the inflation in America caught it really nicely. It meandered a bit, which it often does on these big news events. And then I just caught it on the right side. There's no secrets to that, really. It could have gone either way, but I held it because I respected the zone, and it worked out really well. So from there, we hit this low. Now, although higher time frame bias is sell, this medium time frame is actually a buy. Okay, so I took my profits out here just because it was a news related push. I wasn't happy to hold it for much longer than that, and I expected there to be some move up, as there clearly was. So I took out profits at about 6R. So we're already up to 6R by this point. Let's make a note of that. So 6R. So if you're trading at 1% per trade, then you've already got 6% out of this marketplace, which is, it's a great week. Most people won't even do 3-4% in a week. So, that's a really good week. So we then had another push back into, let's just track it back just a little bit. We then had another push back into this area. Now, whenever we have these big impulsive news related candles, we are going to be expecting price to return to them, fill in the gaps effectively. And we are going to be expecting there to be some sort of reaction. Now, this wasn't the best of zones, okay, which is why I've marked it in a different color. This wasn't the best of zones because this news push down didn't break this low. However, the higher time frame, the range of the higher time frame equally hasn't been broken. So if this is our trading range like this, Okay, that's what we're looking at as our trading range. We've got premium, we've got discount. So we're in premium, so we're happy that sells are most likely here. And although this medium time frame is a buy bias, all that buy has done is taken us into the premium of the higher time frame sell bias. So, you know, you've got to be quite careful when you do your analysis in these sort of areas, because a lot of people would have seen this zone and be like, you know what, we're actually a buy now, so we're not going to take this trade. But for me, I knew that the sell was more likely. Yes, we've had an impulsive move up here, but look at where the rest of the impulsive moves are. You know, these impulsive moves are all the way down, and that move was huge as well. And up here, just you know, sometimes the price action is enough for me to enter a trade. We've also kind of got equal lows here. Yeah, we've got some equal lows there as well. So, you know, there's a few factors here that could indicate this trade. We don't always have to have the most perfect zones. You know, this zone was pretty perfect, to be fair. So that's great. I'm going to take that trade. This zone isn't perfect because this move down hasn't broken this low. The only way that this trade would have been any better is if this low was swept with that move down. So if we'd had that push down and it taken out that low, that would have been another perfect zone to trade from. But there was enough other confluences for me to want to enter this trade. I was more than happy with it. The bias was in my favor. And this is basically how we took it here, look. So very, very similar to the last trade. Okay, we've got this move down, break of structure. Okay, nice impulsive move this time. We'd only had kind of 1 or 2 tags into our zone. So, you know, I wasn't too fussed at this moment, but I was keeping an eye on it. And then we had a second push down, again impulsive, after we'd taken 50% of this area. So look at this area. So this first one just about tags it, to be fair. You could have entered there, but you may have been stopped. I did wait for the second one. I can't remember 100% the reasons why. Possibly because the zone wasn't absolutely perfect. Possibly because it was a retracement into a news-based event. I can't remember off the top of my head why it was, but I did wait for that second break of structure. And that's the good thing about trading like this, is that you will often get multiple entries. And then this is one that we held over the weekend. I had good faith in this trade, held it over the weekend. And then yesterday, which was Monday, we had this great move down. And I did leave, to be fair. I left a lot of profit on the table. I took my profit out here when actually I should have just held it a little bit longer. I should have at least taken profit maybe down around here, potentially. Just unlock that. Yeah, if I'd taken profit, even on the sweep of the low, it'd be another 15. But look, all in all, it's a great couple of trades. We got one at 12R, which at 1% would have given you 12%. So we're a total now of 18% on these. Okay. Personally, I'm trading at 0.1% at the moment, just because I'm running a couple of prop firm challenges. It's a much safer way to trade. So for me, I took 1.8% off these, but you know, I'm happy with that. I ended up on 3% last week, which when you're running any kind of prop firm challenge, you know, is more than enough. You've got 30 days to complete at the end of the day. So yeah, so a couple of really good entries here. It's not really much I would have done too differently, I don't think. Maybe held through this low, potentially. Yeah, could have held through that low. The good thing as well to look at is that when you do get these moves down, okay, if you do get a retracement, you often have these kind of equal patterns occurring. So possibly what I could have done is I could have at least held for this low, because the move that it's made here, if we are to continue that move, it will often repeat itself. So possibly what I could have done slightly differently is just held this trade slightly longer. But look, I got my profits out. I'm happy with that. It was a really, really great week on CAD Yen. So once again, thanks for tuning in, guys. Really appreciate you following me along. If you are enjoying my content, that's a massive favor. If you can like this video, click the subscribe button and pop that notification bell. It does me a huge favor with my channel and helps allow me to continue producing this kind of content for you guys. Also, don't forget to head over to the Instagram, which is at Strong Money Forex. I've got lots more educational information there, secrets and hacks in quick kind of bite-sized pieces. So do head over to @StrongMoneyForex as well and give me a follow on there. That'd be fantastic. Finally, we've got the Discord channel up and running where I do my full analysis, my trade breakdowns. There's about 15 places left in that at the moment. I am going to be capping it at 50. It's something that I'm doing completely for free, not asking for anything from you guys other than just do me a huge favor. Make sure you like, subscribe, follow all my content, and I can continue giving away free stuff. So there's about 15 spaces left in that Discord. Do come over and join us in there. You can kind of trade along with me as I trade throughout the week, and I can show you how, I take my trades and how I stay profitable. Thank you.